Ladies and gentlemen, welcome to the Cadence Capital half-yearly webcast. We've just announced a 5-cent fully franked dividend for the half year, which equates to about a 7% fully franked yield based on the share price of our stock at the moment. And the market has produced a roughly flat return for the last 6 months. In actual fact, the market's been tracking sideways for 3 to 4 years now with quite a bit of volatility, and our fund was also flat for that period. Since the 1st of January, however, the market is up nearly over 10%, and our fund is up about 8.5% for that same period. As we reiterate in many of our slides at the half year and full year, we have 5,600 shareholders now, and 65% of our shareholder base is self-managed super funds. Turning now to the review of the stocks inside the portfolio, it's fair to say, generally speaking, that interest rate sensitive stocks and overseas stocks are the stocks that have performed well in the portfolio, and any resource stocks or industrial stocks are the stocks that have performed poorly in the portfolio. The stocks specifically that have performed well for us are Bendigo and Adelaide Banks, Genworth Mortgage Insurance, iiNet, the overseas company Luxottica, MasterCard, NAB, Retail Food Group and Telstra Group, and the stocks that have performed poorly, Arium, a resources stock, Henderson, LNG, an energy stock, Melbourne IT, and WDS Limited. Offshore investments in the fund have risen now to around 20%, and if you look at our domestic stocks that have a big portion of their earnings from offshore, that represents another 20% of our exposure, so that about 40% of our exposure is now offshore. The following slide, which shows the interim dividend of 5 cents, it should be familiar to most people that read our monthly newsletter, and just reiterating that the 7% fully franked yield obviously has tax paid on it, so that the grossed up dividend yield is actually 10%, and this was based on our share price on the 31st of December 2014. Bonus options exercised prior to the 27th of March 2015 will be entitled to this 5-cent fully franked dividend, but as we've indicated in our half-year results, we need to receive those funds before the record date. Investors can once again participate in the dividend reinvestment program, which will operate at a 3% discount. Now to the outlook for the fund. As we indicated in our last webcast and at the half-year results commentary, the market has been treading water now for several years, and the renewed increase in the All Ordinaries Index now coincides with the Reserve Bank of Australia cutting interest rates in early February, which in our view gives rise to cautious optimism for 2015. In actual fact, the fall in interest rates is also causing the Australian dollar to fall in value, and that is helping our offshore investments, which are obviously denominated in overseas currencies. So there's that double whammy where you've got interest rates falling, which is generally causing asset prices to go up. Interest rate falling is also causing the Australian dollar to go down, which is causing our overseas investments value to rise. The outlook for the domestic portfolio looks promising, with our current rating towards interest rate sensitive stocks tending to deliver the greatest performance inside the portfolio. And our overseas investments have performed well to date, and once again have benefited from the Australian dollar falling over that period. Our investment process has also seen us adding to existing positions and adding new positions into the portfolio in January and February, and that means that we're currently holding less than 10% cash. And I think we closed yesterday at about 7 or 8% cash, which is about as investors as we've been for the last 3 to 4 years. And that's seen us investing into a rising market, which is a bit unusual because on average we hold 25 to 30% cash. We're holding below long-run average cash levels at the moment. Finally, on the last slide, we like to illustrate to people the articles that we've been putting forward into many publications. We've published for Morningstar, the ASX we were recently published for, the Eureka Report. We put an article out in Cufflinks. Livewire have interviewed us recently on the iron ore price, oil prices and the Australian dollar, and we've done a presentation for the Self-Managed Super Fund Owners Alliance. All of this information is available on our website, and would strongly encourage you to visit the website and access any information or any additional information you may require. If there's something you're not finding answers to on our website, please send us an email at info@cadencecapital.com.au. Thanks very much for your continued support and for watching this webcast. Thank you.